Welcome back to FortunePilot. Today is Sunday, March 29th, 2026. As we close out the first quarter of this historic year, the conversation in Istanbul's financial circles is dominated by one major headline: the movement of our national gold reserves. You may have seen reports that the Central Bank of the Republic of Turkey, the CBRT, has adjusted its holdings by approximately 60 tons in just the last 2 weeks. In the world of social media, it is easy for news like this to be taken out of context. Some might see it as a cause for concern, while others see it as a routine balance sheet move. Today, we aren't here to speculate. My goal as a blogger and a member of this community is to provide a calm, data-driven analysis. We are going to explore why a central bank uses its gold, how these swaps actually work, and what this means for your personal savings strategy as we navigate an inflation rate currently sitting at 31.5%. According to the latest data from mid-March 2026, the CBRT's official gold reserves saw a decline of nearly 60 tons, valued at over $8 billion. To put that into perspective, that is one of the largest 2-week movements we have seen in nearly 7 years. But we have to look at the type of movement. Analysts point out that while a portion was sold outright, a significant majority, roughly 34 to 40 tons, was used in what we call gold for foreign exchange swaps. This is a sophisticated way of saying the bank is using its gold as collateral to borrow dollars or lira. They aren't losing the gold forever. They are using its value to stabilize the market during the current regional volatility. This allows the bank to keep the USD/TRY pair near the 44.44 level without permanently depleting our national treasure. What is liquidity? Now, before we go further, let's explain a word I just used. Liquidity. In finance, liquidity is simply a measure of how quickly you can turn an asset into cash without losing its value. Think of your own life. Cash in your wallet is perfectly liquid. You can spend it instantly. A 5 million Turkish lira flat, however, is illiquid. Even if it's worth a lot, you can't buy a loaf of bread with a brick from your wall. It takes months to sell a house. Gold is the ultimate liquid asset for a country. It is recognized everywhere in the world, from London to Tokyo. When the central bank needs dollars quickly to defend the lira or pay for energy imports, they use gold because it's the fastest way to get liquid cash. They aren't selling it because they don't want it. They are selling or swapping it because gold is the only asset that remains liquid, even when the rest of the market is in a panic. The strategy of currency defense. So, why is the bank seeking this liquidity right now? As we know, the ongoing conflict in Iran has sent oil prices above $100 a barrel. For a country like Turkey, which imports most of its energy, this creates a massive demand for dollars. When everyone wants dollars at the same time, the price of the lira can drop too fast. The CBRT's strategy is one of active defense. By releasing gold into the market and securing dollars through swaps, they provide a cushion. This prevents the lira from experiencing the sharp spikes that can destroy a family's budget overnight. This is responsible reserve management. Just like you might dip into your savings account to pay for an unexpected car repair, the nation is using its gold savings to navigate a global energy emergency. It's a sign that the tools are working as intended. What is counterparty risk? This brings us to another critical term: counterparty risk. This sounds complicated, but it's actually very simple. Every time you have an investment that relies on someone else's promise, you have counterparty risk. If you have money in a bank, the bank is your counterparty. You are relying on their promise to give you that money back. If you own a digital gold certificate, the issuer is your counterparty. The reason central banks and smart individual investors love physical gold is that it has zero counterparty risk. If you hold a 24-karat gold coin in your hand, its value doesn't depend on a bank staying open or a government making a promise. The value is inside the metal itself. This is why, even when the central bank is swapping gold, they are very careful about who their counterparty is, usually other major central banks or the Bank of England, to ensure that our national wealth is always protected by a rock-solid agreement. The Grand Bazaar versus digital apps. For those of us living in Istanbul, this macro-level movement has a very local effect. When the central bank swaps gold, it changes the supply available in the market. Today, with gram gold at 6,418 Turkish lira, we are seeing a split. In the Grand Bazaar, physical demand remains incredibly high. People are willing to pay a premium, a little extra over the official price, just to have that physical gold with zero counterparty risk. On the other hand, for my viewers who are just starting their journey, the digital gold accounts at banks like Kuveyt Türk or Ziraat or similar banks remain the most liquid option for you. You can buy 100 Turkish lira worth of gold while sitting in a cafe and sell it back just as fast if you need the cash. My thoughts? Use the digital accounts to build your wealth every payday, but once you reach a significant amount, consider moving a portion of that into physical gold. It's about balancing liquidity with safety. Let's look at the long-term goal. Many of you are saving for that 5 million Turkish lira flat. With inflation at 31.5%, your biggest enemy isn't market volatility, it's time. If you keep your savings in cash, you are losing 31.5% of your buying power every year. That flat in Istanbul will be 6.5 million Turkish lira by next year if you don't hedge. Gold is your purchasing power insurance. Even when the central bank sells gold to manage the lira, the global value of gold remains tied to the global economy. By staying disciplined and ignoring the panic headlines, you are using the same strategy as the central bank. You are holding a Tier 1 asset that grows as the cost of living grows. Don't worry about the 60-ton headline. Worry about your own monthly accumulation goal. Are you adding to your grams every month? That is the only question that matters for your future home. I want to emphasize the importance of following official sources. In 2026, information moves faster than the truth. I always recommend checking the weekly money and banking statistics published by the TCMB, the CBRT. They are transparent about their reserves. Financial freedom is a marathon, not a sprint. We don't make decisions based on 1 week of data. We look at the 5-year and 10-year trends. Turkey has always been a gold-centric economy, and that isn't changing. By educating yourself on terms like liquidity and counterparty risk, you are moving beyond being a spectator and becoming a pilot of your own fortune. You are learning to fly through the turbulence without losing sight of the destination. So, here is our verdict for the week of March 30th. The central bank is using its tools to keep the economy stable, and you should do the same. Keep your eye on the 6,418 Turkish lira support level. If you are a long-term saver, these moments of intervention often provide the stability you need to keep buying consistently. By maintaining a disciplined approach, you are not just saving. You are actively building a foundation that can weather any macroeconomic shift. The journey to financial independence is built 1 gram at a time, and every decision you make today brings you closer to that dream home. Stay calm, stay informed, and remember, gold has outlasted every crisis for 5,000 years. It will outlast this one too. If you found this professional analysis helpful, please subscribe to FortunePilot and click the notification bell to stay updated on our latest flights. Let me know in the comments. Have you checked your bank's gold spread today? And has it changed your strategy? This was your market flight plan, and I'll see you in the next update.